Good afternoon and welcome to the Vivid View. My name is Matt Brennan from Vivid Financial Services, and this week I'm going to talk to you about fixed rate loans compared to variable rate loans. At the moment I'm being asked this question daily by my clients. Should I fix my rate on my home loan? The loan rates, as you know at the moment, are the lowest that they have been historically. So now is a pretty good time to consider this option. So my first question back to my clients is, how long do you intend to stay with this mortgage and how long do you intend to stay with this property? That's an important question because once you fix your loan, it is just that, it is fixed for that period of time. And if you wish to get out of that loan and refinance to another lender or sell that property and buy another property, if that happens within that fixed rate period, you will be charged an economic cost, which is called an early exit fee by the lender. Now, depending on the time that is left for the fixed rate loan and how much you actually have borrowed, that could run to a few $1,000s as an exit fee, which may not necessarily suit your budget. So number one, have a look at where you are currently now with your mortgage and the property that you're in, or if it's an investment property, how long do you want to keep that investment property for? Have a talk to your finance professional, because at the moment, the move to a fixed rate might not necessarily meet your overall structure. So you have to look at what that effect will do to not only your budget but also your portfolio structure. Fixed rate loans are a very good idea because you get some benefits with those. Firstly, you'll know what your repayment's going to be for that fixed rate period, and you know you're not going to be affected by any rate movements. On the bad side, if the rates do go down, your rate will be stuck a bit higher, but it's not going to go much lower now at the moment, according to all the economists and the pundits. And that's an opinion, that's not professional advice. So step number one, have a look at your current situation and the mortgage that you've got and the property, and how long do you intend to be in that property or hold that investment property for. Number two, talk to your finance professional so they can give you a full assessment on your overall picture, and would the move to a fixed rate loan help you or hinder you in that process. Number three, consider having a split facility, which means you can have part of your loan fixed and the other part variable. So you're still playing the game with the variable rates, but you've got a portion of it fixed, which gives you a bit of peace of mind. It gives you a certain amount of surety about what your repayment will be per month. So have a think about those options there. But that is all we have time for today. Next week will be the last episode of the Vivid View for 2016. We're trying to work on something real special for you. So if you have any comments or any questions in relation to fixed or variable, or any of the subjects we've covered so far this year, drop a note in the box below and send it through, or jump onto our website at www.vividfinancialservices.com.au, go to our contacts page, complete your details there, put your question in, and we'll come back to you within 24 business hours. So look, stay safe, have a wonderful weekend. We'll see you next week for the last episode of The View. Thank you very much for watching.